All right, guys, welcome to a brand new video. And yeah, man, in this video, I'm going to be doing a trade breakdown on Euro USD. You guys know by now, that seems to be my favorite pair to trade. For beginners, I want to say Euro USD is one of the easiest currency pairs that you can trade just because of the slow movement and precise movement in terms of market structure. Anyways, according to my observation, I feel like a very, very simple entry-level currency pair that you can trade, obviously, is Euro USD, okay? And yeah, without any further wasting of time, let's jump right into it, okay? I'm going to be breaking down a trade on Euro USD. Very, very simple trade, very, very, nice looking trade in terms of the way the trade was presented, okay? Now, in this video, it's not going to be as long as the previous videos whereby I break down the market from a macro perspective, but this video is going to be more so like me just following the market from recent price action, okay? So I really don't want to go back into, some very, very macro movement of the market here. So I'm not going to be, breaking down these charts from a macro perspective like this. I just want to show you guys the power of the basics, okay? The power of the basics. So as you guys know, or if you don't know already, the strategy that I'm trading is based upon smart money concept, or you could say I'm trading smart money concept, right? But one key element of smart money concept that I brought out that has really shaped my trading strategy is market structure, okay? My approach to the market is a very logical approach and a very simple approach, okay? So the trade that we're going to break down is, of course, this trade right here. I don't know if you guys have been following the movement on Euro USD for the longest time now recently, but for me, I'm following the movement of Euro USD, and if you wake me up from sleep, I can tell you where exactly Euro USD is, right? Because it's my most traded pair. So I look at it every single day. So the trade that we're going to break down is coming from right here, okay? Right here. Very, very simple trade. But again, just like we like to do here, if you're new to the channel, please subscribe to the channel. And if you're new to the channel also, and you don't understand anything that I'm doing here, you want to find yourself on my YouTube channel and you want to go through the free course that I have on YouTube, right? So that free course is going to teach you every single thing you need to know about trading the foreign exchange market, from how to, open a trading account to how to analyze the market and of course trade the foreign exchange market. It's going to be a very, very wholesome experience for you if you're a beginner. I want to advise that you get you a pen and get you a notepad while watching those videos, because of course it's not Netflix, it's not a movie. You want to watch and you want to take notes and you want to practice while you're watching. You want to apply the things on the charts whilst you're watching the video, and it's going to make more sense. So again, if you're new to the channel, of course, man, Prof again, y'all know what it is. And yeah, let's get into the trade breakdown video, okay? So this is going to be a very, very simple trade breakdown video, but I want to start the breakdown from this high here, okay? Now, since we are in a downtrend, okay, just looking at the market from here, from this high here to this low here, of course, you can see that the price is reducing, okay? The price is in a downtrend, is descending downwards. Now, not just that, we are having breaks of structure to the downside, okay? Talking about a break of structure here, another break of structure, around here. Okay, so in terms of characteristics of a trend, we are having price descend downward. Okay, that's one characteristic of a downtrend. Number two, we are having breaks of structure to the downside. Number three, we are seeing the impulse legs pushing to the downside and the pullback leg pushing to the upside, failing to go higher. Okay, we are seeing again impulse leg pushing to the downside and pullback leg pushing to the upside, failing to go higher, and we are seeing continued impulse to the downside that is indeed taking our structure to the downside, okay? And of course, in a downtrend, we have lower lows and lower highs, okay? So all of these are characteristics of a downtrend. Now that we are certain that we are in a downtrend, where are we going to be entering the market from? Now, I have a video on my YouTube called Introduction to Technical Analysis. And if you haven't seen that video, man, I really ask that you go to see that video, or you know what you're going to do? Just pause this video here right now, go back and watch that video, and then come back to this video and continue right from where I'm, starting this video right now. Okay. So it's going to make more sense when you understand the basic introduction to technical analysis, talking about trends, how trends are formed, the characteristics of a trend, and how a trend can change, okay? So please go back and see that video before you see this. In fact, maybe you even want to add to that the layers of structure video that I did, because I'm going to be talking about internal structure in this video a lot. So you want to add internal structure or the understanding of layers of market structure to your understanding of market structure before you can understand what exactly I'm doing in this video here. But without any further wasting time on conceptualized views, let's jump into the market. Or before we even do that, let me take you guys here right now, and let's just look at some concepts of market structure. Now, in a downtrend, when the market is bearish, we have a low, high, we have a new lower low, of course, breaking structure to the downside here. So we had a break of structure to the downside. Now, in a downtrend, once structure is broken to the downside, right, the possibilities that exist in this market is the market can either come to the origin of the break of structure, or is going to use the previous level of structure it just broke as some form of resistance, okay? Now, the reason why that's resistance in the first place is because there exists a possibility in the market whereby the market never creates a new lower low, right? So this is very much possible in the market to happen, okay? Now, if this scenario actually plays out in the market, it's safe to assume that the market reacted from a demand level or a support level, right? It's safe to assume that the market is reacting from a support or a demand level, okay? Now, why is there a support level here? Because obviously the buyers can decide to get into the market here and push this higher than this, and then take the market all the way to the upside, okay? Now, this is one possibility that exists in the marketplace. Immediately, this possibility is invalidated like this. Once the market breaks through this, which is a demand level or a support level, this level now becomes a resistance level, which is now turned into a breaker level. So in this case, because the market is breaking structure to the downside, I'm going to be calling this a bearish breaker level, okay? So that's a bearish breaker level. Now, in terms of the trend, how the trend can continue, obviously, you want to buy low and sell high. This here is this point here is relatively lower than this point here and this point here. So you can't be selling from this low. You want the market to pull back to either this level here and sell from this level, or you want the market to pull back into the origin of the break of structure and then sell from this level, therefore invalidating this level as the breaker level. But in a case whereby the breaker level is not invalidated, then you want the market to sell from this level, okay? Now, this is the concept of the breaker level. Now, in this particular trade I'm about to break down, here you can see the structure of the pullback leg, okay? The internal structure of the pullback leg. We have something like this, this, and then the market broke internal structure of the pullback leg, thereby telling us that, the market is now about to, sell to the downside. So based on the structure of the pullback leg, this area here becomes a breaker level. Okay, this area here becomes a breaker level because, of course, if the internal structure was to continue, then we would have had reaction from this level here and continuation to the upside. but this level here was broken. So as soon as this level here was broken, we had a breaker level, okay? And of course, we had this here, in turn, failed to come back. Then we had a break of this like this. So we had an internal breaker level there. And of course, we had a supply level there. So ultimately, we're expecting the market to pull back in terms of most high probability trade, pull back to some levels such as this. So we can now trade away from those levels. Now, when it comes to how the market reverses, when it comes to, in terms of patterns, how does the market reverse? Again, if you watch the introduction to technical analysis video, I gave you guys a detailed explanation of how the market reverses. But here, I'm going to show you two major patterns that the market uses when it comes to reversal, okay? The first one I call the basic reversal pattern. When the market is bullish, it breaks structure to the downside, and then it shifts downwards, okay? This is a reversal pattern. But I don't want you guys to look at this as just a pattern. I want you to understand the story behind the pattern, the price action behind the pattern, okay? Now, another way the market can reverse also, I call this the order flow reversal, is where the market does this. Then we start to see some type of bearish order flow that in turn does this. So these two reversals are very, very different in the sense that in the first one here, you have your break of structure immediately after a reaction from supply. While on the second one, in as much as you don't have a break of structure yet, you can start to see a bearish order flow or a formation of a bearish trend before the break of structure, okay? Before the break of structure. Now, with the understanding of all of this, let's now jump into the market, man, and just break down the charts. Again, I don't want to make this video too long. I just want to make it simple enough for everybody to understand, okay? This is where we simplify foreign exchange trading. This is where we decomplex the idea of foreign exchange trading, okay? So looking at this right here, now, all you need to pay attention right now to is the trend, okay? Now, I'm going to mark, first of all, the external structure based on what I can see on the daily time frame, okay? So on the daily time frame, external structure, what I'm going to do here is from this high here to this low here, from this low to this high, from this high, not to this low, but to this low here, okay? To that low there. Now, I'm going to change the color of this to black. And this is going to be my external structure on the daily time frame, okay? Now, looking at the way the market presented here, of course, you can see a break of structure to the downside here. And another break of structure to the downside here. Okay, now I don't want to make this line too intrusive. So I'm going to double click on this line, go to style, click on the color, and then reduce the opacity to something like, I believe this is okay for everybody to see. So that's my external structure. Now, if I zoom into this leg here, I believe you can see internal structure, but this is not the leg we are concerned with. Why? Because that's not the most recent leg that took our structure to the downside, okay? The most recent leg that took our structure to the downside is the leg from this high here to this low here. Okay, now what I'm going to do is I'm going to investigate this leg and look for the internal structure within this leg, okay? The internal structure within that leg right there. And if I do that, just zooming in a little bit here, let's start to mark out the internal structure within that leg. Again, starting from this as a high, that will be a low. This will be a high. This right here will be a low. That's a high right there. This here is a low. This here is a high. And from this high, we created this low right here. Now, again, I'm going to change the color of this. First of all, lock it in. Change the color of this to red, telling me that that is internal structure. Now, for the opacity of this, I'm going to increase it a little bit just so it's more visible, okay? So 70 is not a bad number. Yeah. So what you can see here is the black line here is the external structure, and the red line there is the internal structure, okay? The internal structure, right? Now, what I want you guys to pay attention to is the nature of this pullback here on the internal structure, the pullback from this to this. In fact, if you pay attention to all the pullbacks on the internal structure, I believe you can see successful mitigations of all of these supply levels. You can call them supply levels or you can call them order blocks, but there has been successful mitigation of this here, successful mitigation of this here. And at this time here, there was no successful mitigation of this. Okay. Now, again, we had a fair value gap just before the supply level here. And then we had this. Now, I'm done with the analysis on the daily time frame. I've gotten my external structure and I've gotten my internal structure from the daily time frame. And of course, I've been able to get my zones on the daily time frame. One of these zones here is coming from the weekly time frame. So if you look at the weekly time frame, of course, you can see a clear bearish trend, with this candle here being the weekly order block. Now, refining the weekly order block or the weekly supply level to the daily time frame, we have a daily level within the weekly level, which is this. Okay, so we were definitely expecting the market to pull back up to some areas such as this, so we can start to sell the market upon seeing confirmations from areas such as this. Okay, and what type of confirmations do we want to see? The two reversal patterns that I just shared with you guys. Okay, so now going to the 4 hours time frame, just to wait, hold on. Now, what I'm going to do is I want to make this visible on the 4-hour time frame. So this line here, go to visibility and make this visible on the 1 hour to the 8-hour time frame. Okay, lock that in. So for the red line, double click on this, make it visible from the 1 hour to the 4-hour time frame. I don't want it to be visible on, yeah, that's cool. That's cool. 4-hour time frame. So now when we go to the 4-hour time frame, we can see our structure that we have already gotten from the higher time frames. Now, when we come to the 4-hour time frame, I want you to pay attention to this pullback right here. Okay, I want you to pay attention to this pullback right here internally on the 4 hours time frame. Okay, now if you look at what's going on here, we have an uptrend, something like this, something like this, and then we broke market structure to the downside. Now, immediately market structure breaks to the downside, we can expect the market to pull back to areas such as this for a sell. Please bear with me. I know this is looking a little bit messy, but try and follow what I'm doing here, okay? So immediately this happens, we can look at the market to pull back to areas such as this here for a sell, which will now be the breaker level. Again, like I said, if this market was going to continue to the upside, it means we were going to have a pullback from this high into this area here and then continue to the upside, meaning that there was a demand level here. But for the fact that this is broken now to the downside, that demand level has turned to a supply level. So something like this we can expect. And of course, we can also expect the market to again come to the origin of the break of structure, not origin betas, okay, or the origin of the break of structure. So this is what some people are going to call their ROTO, return to order block or return to origin. But again, please don't use terminologies you don't understand. This is simple market structure. Again, logical approach to foreign exchange trading, okay? So these are two possibilities that exist in this marketplace. Now, if you look at what happened here, the market, of course, pulled back to the breaker level. And of course, let's break down what we had internally there that gave us the final confirmation to be taking the trade from there. Again, you want to investigate these things on your own. Take out the time to investigate these things on your own and see if you can find meaning in what we're doing here. So in order to make this make sense, I'm going to draw the internal structure on the 4-hour time frame. Okay. So internal structure on the 4-hour time frame here. Pick your path tool. From this low here to this high here. From this high to this low here. From this low to these highs right here. And then, of course, we had a break of structure here. We had this, and then we had these lows here. So I'm going to change the color of this to blue because that's another layer of structure. Now I'm going to align all of this with the low here just to make it look a little bit more slick. Okay, so this low, sorry. Again, you want to stretch out your charts so you can see things clearly. And if you don't know how to bring your charts back to the original view, all you need to do is hover around here and click on this A. It's going to auto fit the data to screen. Okay. I know a lot of people are going to have that problem with TradingView. These are little tips and tricks on TradingView that you can apply to make your trading a little bit more gamified and a little bit easier. Okay. Now, this breaker level here is coming from the internal structure, but at the same time, on the daily time frame, that breaker level there is also a daily order block or a daily supply level. So definitely, I'm expecting the market to pull back to this level here, waiting for confirmation before I get into that trade. So now, let me take you to the 15-minute time frame. Let's see the behavior of the market when the market reached, that breaker level. Okay. Now, again, this is the same breaker level. Let me just show you guys here on the. So we have the 4-hour time frame on this side here. That's the 4-hour time frame. And here we have the 15-minute time frame, hopefully. Okay, yeah. So here we go. On the 4-hour time frame, you can see the market has now reached the breaker level. And what do we want to see from the breaker level on lower time frames? We want to see reaction from the breaker level, and we want to see our reversal pattern. Okay. Now, for the sake of the screen, let me expand it on the lower time frames. And let's go over what happened here on the lower time frames. Now, I'm going to stretch this out a little bit. And let's look at what happened here on the lower time frames. Okay. So on the 15-minute time frame, you can see how the market pierced into the breaker level here. This now becomes our first high. Okay. So this here is a high. This right here is a high. All the way to this low here. Okay. All the way to this high here. Now I know this doesn't make sense to a lot of people. All the way back down to this low here. To that high there. And then we had our break of structure to the downside here. Okay. Now, this type of break of structure you see here is very tricky because obviously you can see the market only wicked out of this low here, grabbing the Asian low. For the people who understand a little bit more about smart money concepts and of course technical analysis from an institutional perspective, you know about the Asian high, the Asian low, liquidity and all of that. But I don't want you guys to look at this as the market grabbing liquidity. I want you to see this as a break of structure to the downside. And the reason why I'm taking this as a break of structure to the downside is because if you look at this area here, we already have successful mitigations of all of the demand levels in that area there. Okay. So you can see what's going on here. This level here of demand successfully mitigated. So in my opinion, there's no reason for the market to be coming below these areas anymore. Okay, we already have successful mitigation of this area here. And of course, following this internal trend, we have another demand level here. we would be expecting the market to react from that demand level and go higher if the market is indeed bullish. But look at that. We had a reaction from that demand level. By the end of the day, it failed. Okay, taking out this structure to the upside. So to the downside. But my reading of this is not just breaking structure to the downside, but invalidation of these demand levels. Now, of course, once demand levels are being invalidated, that's a sign that the market is about to sell. Now, just following the internal structure here, again, if the blue line you're seeing here is my external structure on this time frame, please don't get lost, man. Please do not get lost. Don't get lost, right? So if this black line here, relative to the time frame I'm looking at right now, is my external structure, the internal structure of the leg from this high to this low here is what I'm going to draw right now. I'm going to make that in blue or maybe in red. So that high, low, high, low, high. This here is my low, or this here is my low, not this. This is my low. Lowest point before the pullback. Low, high, and then low. Now, of course, from every single internal structure level, we're going to have internal zones, and that's where this zone came from right here. Okay. Now, the entry you can see is based on the fact that I didn't wait for confirmation to take this trade because I already have a break of structure to the downside. Okay. But again, you can see how even when the market came here, reading price action, okay, what's the internal structure of the pullback leg going up? You now have this as a low, high, low, high, low, high, low, reaction from the supply level, and again, break of structure to the downside. Okay, so as soon as you see this break of structure to the downside, that's your confirmation to just set yourself a sell limit. And of course, you can see how the market went back to that area there and gave you a very, very amazing trade to the downside. Okay, talking about the order block from here, boom, to the downside. Okay, so that's a very, very simple trade breakdown. I really, really, really hope you guys enjoy this trade breakdown. It's a relatively shorter video just because I'm not doing a detailed breakdown from a macro perspective, but I really hope you guys understand what I just did here. I really hope this is not confusing you. I really hope you gain value from this video. And again, if you're new to the channel, please like the video and subscribe to the channel because there's going to be more of these type of videos coming your way. And yeah, let's wrap up the video here. And yeah, I'll see you guys in the next one, man. Peace. Gang, gang.